Hey everybody, good morning. How we doing out there? It is Doc with Ready Set Trade. Today is Wednesday, the 31st of May. Just about into June. Here we go. I am back. Let's see what's going on today. So today we have a little bit of Fed speak already this morning. I don't think we've seen that much of a move off of it. Actually, Fed speak is over as of Friday. So that is when the quiet period starts for them, is on the weekend. So I don't see anything scheduled on Friday the 2nd. That doesn't mean that we can't get, somebody grabbing a mic, a rogue reporter out there shoving a mic in their face and asking them for. But we've started to see the market caring less and less and less about the Fed. Very interesting. So even the PCE report that came out last week, which was rather hot, did not grenade the market, did not destroy the market. So we're starting to see the market carrying less and less like, yeah, whatever, get it over with. Certainly nowhere like what we went through last year where it was hypersensitive to this. So that's good news because it'd be kind of nice to get rid of this hypersensitivity to CPI and PPI and some of these reports every week in the PCE. I mean, we've been dancing amongst the landmines for the better part of a year and a half now. So that's kind of the Fed. We have reports coming out today, Chicago PMI. That will move things around a little bit. JOLTS will be important. I mean, I guess we'll figure out what the next big thing is. The next big thing. Is it going to be the jobs report, which comes out Friday? ADP employment report comes out Thursday morning as well, too. So has the Fed done too much already? Have they started to destroy demand? We're starting to see things tip down a little bit, but have they also destroyed the job market? We'll see. Okay, Fed funds futures now showing a majority opinion. I knew this was going to happen. I just knew it. I knew this was going to happen the way the Fed's been talking up. And especially after last Friday's PCE, it looks like inflation's not going away. So we're going to be doing this rate hike thing until they crash the market. So looks like we have another one coming up on the 14th of June in a couple of weeks from now. 2 weeks from today, as a matter of fact. 26th July looks like at this point, majority opinion shows that nothing will happen then, but there's still a 24% chance that we may have yet one more hike going on. And so we'll see the next round of CPI and PPI and PCE if this matters or not, okay? By the end of the year, it looks like we're cutting rates. Earnings, let's take a look at earnings today. Let's see, we had HPQ coming out yesterday. Let's go find that one, HPQ. And not too good. Okay. And then Hovnanian, which is a home builder, came out this morning, I think. And that shows up slightly, but not much. We're going on scraps. Now, this afternoon will be interesting because we have CRM. Maybe there's GameStop and maybe it's next week. We don't know. But then we start really into this dry patch where we're just about done because the next cycle of earnings will start in about 6 weeks from now for the second quarter. So these are just the tail end Charlies coming along for earnings. Okay, this week we'll be here through Friday, normal times. And let's see, our next time off is going to be Juneteenth, I think, the Monday, Juneteenth. So we're about 3 weeks away from that holiday. And then we have July 4th, and then nothing until Labor Day. Okay, let's see what's going on with the charts here. Looks like we cycled back. Okay, we're going to kill the music. All right, so what's going on in the S&P? We are in this really, really tight range. Looked like we had an attempted breakout, an attempted jailbreak on Friday. And we had on Tuesday, which was yesterday, we had a gap up, which got faded back down. So once again, a little throw over. We had a little throw over last week above 4,200, which came back down, slingshot higher, another throw over. So what is going on here? Market's looking for certainty, not finding it anywhere. Good morning, Fred. Good morning, everybody else. Welcome to Ready, Set, Trade. My name is Doc. Today is the 31st of May. We'll get started here in mere minutes. Okay, we have just about 3 minutes left before the opening bell. Now, let's look at yesterday. Now, I don't have the opening range set up for yesterday, but yesterday, when I looked at it yesterday afternoon, it didn't look too bad. I was not trading this. I was playing nursemaid in the hospital yesterday. Okay, so there's 9:30. Let's go to 10 o'clock. So 10 o'clock, there is our opening range for yesterday. So would we or would we have not placed a trade yesterday? If we'd gotten in early, probably would have placed that trade, and we would have been out of it by 10:15 if we'd placed an iron fly. Iron flies seem to be still working in this market. We are getting some good movement. We're getting enough movement to allow us to get out of the position. Okay, 2 minutes to go. 2 minutes to go before the opening bell. So far today, what I'm looking at is 23.378 expected move for today. 23.378. We had a good one last week. 526 was, I believe that was Friday. We had a good one. We were in 936. We were out 956 for $100 per contract. And so we'll give this one a shot today. We'll see if there's something that shows up. Right now we're down about 20 handles. And the market's a little bit nervous about the whole idea of not passing the debt ceiling debate. Doesn't know. 90 seconds to go. 23.3 showing right now for the opening range. But just if we zoom out and look at what's going on here, again, I have not used a 4-panel fractal for a long time. We just never need to use it because what's happening is the price is stalled so much. It's so range bound lately that we're having to go down to the extra 78-minute chart to pick up some structure and what's going on here. So now this will probably not stay like this for a whole lot longer until we get some big swings coming along. Again, I still think that the recipe for fixing this market is a drop down to 4,000, which is going to be painful for a lot of people short term, but I think this will loosen things up a little bit, get the market moving again. Okay, we now have about 30 seconds left to go. We are down. Let's see, we are down on the day. We're down about 20 handles to start off the day. That's interesting. And here comes our opening bell for today. So another 5 seconds to go. Okay, the opening expected move is 23.20, 23.20 for today. Okay, so our VIX position expired. Now let's go. Yeah, I mistimed that one. Mistimed it, missed everything. Okay, it actually was up for, I think we got a good entry on it. It's just that it did not move in the way that I thought it would. Okay, let's go to our gap chart. Got all kinds of, hopefully, we've got all the alerts and stuff like that. Hey, Bob, good to see you again. Let's see what our gap is today. We do have a little gap to the downside. Again, we can get rid of this one. That one's been run through. That doesn't exist anymore. So we have a little bit of a gap to the downside here to start things off. And that's about right there. That's about right there. Okay, today's opening print was 41.95 on the ES, 41.95, and that's on the ES, and that is not on trying to figure out what's going on here. Okay, there we go. That is not on the cash index. Okay, so 41.95. So that gives us an upper and lower expected move today. Upper is 4218.20. 4218.20. Let's go ahead and set this one. 4218.2. Lower expected move is down here, and that is going to be reset to 4171.80. 4171.80. Okay, so what we want to do here is we want to just kind of check and make sure that the price started kind of halfway in between those blue lines, and it did. So let's now reset our anchored VWAP all the way forward to 531. And here we go. Here is today's battle zone. We have this upper gap here. That is today's opening gap. Price is so far above the anchored VWAP, heading higher. Let's see what we have. We're down 17 handles. Let's see what we have in terms of market watch. I want to see what sectors are moving to start the day. It looks like we have, well, the Dow. Looks like everybody's down right now. Okay, mostly it is energy taking the brunt of that, and also XLY. So it looks like XLY, we must be having either Amazon. Amazon's down slightly. Tesla is down about 1%, not really that big of a deal. But XLE, like ExxonMobil, is gapping down. Let's see what CVX is doing, gapping down. So overall, the XLE is gapping down right now. Let's see what financials are doing. Financials are also gapping down today. They're below the 200-day moving average. Financials are not particularly strong, and this is kind of what the Russell looks like right now. So if we look at the Russell is also gapping down. Bear flag. This looks just like the XLF, doesn't it? Now, what's different about this market is the NDX. The NDX is gapping down slightly today. That looks like a really unsustainable type of move where we've gone completely vertical. And a lot of this is due to, hey, Andy, good morning. A lot of this is due to NVIDIA. NVIDIA is gapping down, trying to close that gap. AMD is also gone ballistic, as has so many other companies so far. So, but they're due for a little bit of comeuppance here, a little bit of gap fill perhaps. Apple's relative strength this morning. Apple showing relative strength this morning. Okay, let's see. What else have we looked at? Let's look at Microsoft. What is Microsoft doing? Relative strength this morning as well, too. Yeah. Okay, we are down just a little bit on the the NASDAQ, but not all that bad. Okay, so heading back down again, stretching out the opening range, Now, let's go take a look at the expected move again. And it's actually coming down a little bit. So I'm going to go with a 25 wide here. Let's go with a 25 wide. Iron Fly. 31 May. And we're going to center this around 41.90 for right now. So 41.90, 41.90. And then we're going to go 25 points wide because the expected move right now is 22.4 and it's shrinking. So it's going to be 42.15 to the upside. And then 41.90 minus 25 points is going to be 41.65. And there's about a $15 credit. Let's look at the risk profile. That looks pretty good right there. I want to see if there's any decay in the next couple of minutes. I want to see if we start to move around a lot or if we continue heading to the downside. Let's see what market internals are looking like this morning. Market internals, somewhat weak, getting slightly weaker. The tick is coming back up again, just a little bit. Interesting. Okay. Getting a little decay in here. A little bit of decay. Seeing a little pop to the upside. I want to see if this goes anywhere or if this dies on the vine at the anchored VWAP. I think I'm going to do a quick iron fly here for on E-Trade. All right, I'm going to set this at 41.90. Same strikes that we have here. You know what? I think I'm going to do this at 41.95. All right, I'm going to pop these up 5 points. Not a really great fill, but I'll watch this one later on today. I'll watch this one for today. Okay, so let's see what's happening here. So Microsoft is, let's go through our typical ones. Our unicorn list here. So here's Apple. These are the usual suspects. Meta is about flat for the day. We have Amazon. What's it doing? Amazon's about flat for the day. Microsoft is up for the day. Tesla is working higher right now. Google is about flat for the day. NVIDIA slightly down. AMD is a little bit further down. 1525. So I'm going to set up my grouping for this one. And I'm going to set this for 1425 and do my best to just ignore this. Okay, entry on this one was about, I'd say 41.92. So my upper and lower stops. $42.15, $41.69. There's the lower stop. $42.15 is the upper stop. So there's my stops on the position. There's the entry point. We have a 41.95 midpoint on this iron fly. I'm just going to ignore it. Just going to ignore it the best I can here. Okay, so price seems to be trying to fill the gap. Here's the gap for it today. Price is trying to fill the gap. It's above the anchored VWAP for right now. And let's watch our market internals. Let's see what they're doing. Market internals seem to be wanting to recover here. Seem to be wanting to recover. Working on that gap. Yeah, the iron fly is picking up value now. And so also we have the expected move, which started out its day at 23.2, is now 21.15. So it's starting to drop pretty heavily. So I had a 942 entry. I'm going to call this a 0T entry on E-Trade. And the center of this was 41.95. And that's a 25 wide. So we'll track this one and see how it's doing. So far, our win rate's about 94% on these. Profit factor 4.5. Been a while since I've lost one. I'm due. But you can't go like into that with that attitude, like, oh, this one's gonna lose. Because then you will find a way to manifest that. Ooh, big drop in price. Big drop in price. There we go. So we're just kind of cranking around the opening range here. Okay. Now there's a couple of trades that are going to expire today. The long condor that we did for the end of May, which expires today, we just never got the move. We just never got the move, which is just kind of amazing that we have seen this thing go full bore into, I mean, we've been sitting on so much energy for so long. This is very much like what we went through in 2016. 2016 was the last time we saw a market like this. And it's done a really good job. The market's done an excellent job of last October was in full bear mode, right? Full bear mode. Look at this. I mean, up until this point here, just crushing it to the downside. And where this all changed was right up here when everybody was making the 2008 comparisons and saying, yep, here we go. We're gonna walk on down to somewhere down in here. And you can just tell. I mean, you just, read between the lines on Twitter, and everybody was expecting to see the price drop like a stone. So what did it do? It went the opposite direction. I think the market had had enough at that point. And so what we've been doing really since that point in December, actually since the bottom in October, has been head higher. So there we go. Okay, now I do have one position, which is, let's see if I can find this thing. Now, I did this in the room. This is not an official trade, if you know what I mean. This is not an official trade that we put into the platform and we do exits on and everything like that. Let's see if I can find this. It is a 23 June position, which we need to be out of. I think I'm going to close this thing today, because if we pop higher, the risk is to the upside right now because of the way that the gamma works and everything. Risk is to the upside. So this is the position that we put on using 25 wide. This is a 45 DTE position. We got to be out of it by this Friday anyway. So that's only 2 days from now. It's not at my profit target, which is 50% of the original credit, which was 800 and some 840 or something like that. So it's not there yet. It's unlikely to be there by Friday. So I have to manage it anyway on Friday. And the risk is to the upside right now with the debt ceiling stuff. Any kind of vote, which comes out okay. And the other issue is if it doesn't come out okay, if we drop to the downside, then what's going to happen is implied volatility will shoot higher and work against this. So I think I'm going to take this one down today. So let's go ahead and do that. And that's this one right here. So it's up by 240, 245. It's not huge, but it's a nice profit. So let's find that exit order, which is this one right there. And let's modify this, and we'll start to work down from midpoint. We've had some weird price movements over the last month or so. It's been really odd. And the options seem to be, I don't know what the word for it is, captive. So 605 was our exit on this one. Let's go ahead and mark this down. All right, so this one's gone. So this should be about 19 days. That's 22 days, okay. And exit order was 605, and that's a win. So what does that give us in terms of a profit? Should be over 200, 226.84, including commissions. So that gives us a 13% return, and the capture is just over 25%, which is okay. That's acceptable. So that is one of our 45 DTEs. That was the 23 June. We didn't have the options that we needed to be able to do 5-wide, but as you're seeing, some of these, the wider spreads can actually be a little bit better in terms of producing faster profits. The narrower spreads at 5-wide can be more difficult to do as profits, but I'd like to do 5-wides in here just because I don't know how big everybody's account is. I'm going to change this to SPX 45 DTE. Okay, so we still have a couple here of 30 June, 7 July, 7 July. Those are in various states of profitability or break even. So again, we don't have to close those. We don't have to do anything with those yet. Those are doing fine. Okay, so I'm going to take this one down. This is what I use the sim trade for, is that I will use the sim account to be able to map out trades on different brokerage platforms. I just use this as a free analyzer. So some of the other ones that we have, let's see, 40, 25, 40, 30, 43, 40. So here's another one. This one is actually looking pretty good. Well, it was. It was looking good. And then here's, we have a 25, 30. I think this one is another one that we have. So it's just about break even. But you can see the risk is to the upside. We were doing really well with these when the price was at the sweet spot here. And then we got that rally from debt ceiling. Not yet at the delta thresholds yet, but approaching that. All right, so what's going on with our chart here today? Just chopping around. Opening range right now, we have about 4 minutes left in the opening range. And this is showing about 8 and 4, about 12-point opening range. Price is just kind of wandering around the anchored VWAP. Not much going on. Flies at break even. We do not have any signals to take any trades. Now, tomorrow we'll look at another 45 DTE. We'll go over here to the SPX. And we've got a 14 July, which is at 44 DTE. Let's see what we can do with that one. Usually the puts are not the problem. So if we look at 30 delta here, the puts are, we've got 10 wide, or we can do 5 wide if we wanted to. But going up to about 15 delta, we don't really have that much to work with. We could do 25 wide if we want to go for a 17 delta up at 43.75, which is probably what I'm going to do. I'll probably go with a 25 wide. I won't track it as an official trade, but we'll do it in here, and I'll answer any questions that anybody wants to on that. So we'll do very similar to what I did for the 23 June, where if the strikes are just not there, I'm going to go either 10 wide or 25 wide to get what I have to do. Okay, not much going on here with the opening range. And market internals continue to get slightly worse with the advancers minus decliners. This is because the tech seems to be coming in just a little bit. Tech has closed some gaps and now seems to be heading a little bit lower. So we'll keep an eye on that. I've got a 5 DTE iron condor that I set up last week, which got run over on the big rally up. And I've adjusted the put spreads up once. It's not a trade that we did in here. But if I see the price come down another 10 points or so, I may be in the ballpark to be able to get this thing out for a profit. So if we continue leaking downward today, this thing is in play. And that's the important thing about these, is like I could be really defensive right now and pull up these puts. I could do it yet again. But that would make it very hard to win. So I'll make that decision here in the next hour or so if we have an ability to do that. But that would be nice to be able to win something like that. What do they call that? Grabbing victory from the jaws of defeat. There's just no linearity in today's price action. All right, let's look again at, we now have financials joining energy in the move to the downside. Industrials are also getting sold off today. The only thing that's really positive so far today has been tech. The VIX continues to go higher. And it looks like we're moving lower. We have our opening range now printed, and we are breaking down below the lower opening range. Okay. So pretty gnarly day. Nothing much going on. We did not fill the gap. Market internals getting a little bit weaker, but I don't see like blood in the streets kind of market internals, but we haven't really seen that for a while. The wild card here is if big tech starts to sell off, that will cause, that's what's kept everything propped up for the last few weeks, is big tech has kept the rally going. And if they start to sell off, we could see some rotation into some other sectors might come to fore, but probably we'll have an initial, that could give us our move down to 4,000 that I keep looking for. All right, guys, I have nothing else for today. Tomorrow we'll look at adding another 45 DTE position. We'll look at another 0 DTE trade, perhaps an iron fly. We'll see what we can do. And that'll be Thursday. So we may get a vote by tonight, and then we'll see what the market wants to do with that. Is it going to be sell the news, or is it going to be just, we don't know. We don't know. None of us know exactly how it's going to play out. So this is how we have to approach every day with a price action, saying we don't know what's going to happen. let's just embrace the movement. Thanks, everybody. You guys take care. Good to be back. See you tomorrow.